Hello, today is November 12th, 2016. My last call said that unless we promptly took out this high, ideally by gapping over it, that lower prices should print, which they did. This price target proved to be out of range. We'll just have to add it to the list of failed targets. It's not a very long list. I personally don't think we'll have to wait very long for it to print. Here's what MEJT had to say during the day. Over here it said ultimately lower prices would print, which they did. It also said we were likely to retrace and hit this price, which we did. In the afternoon it said ultimately lower and higher prices would print. Both of them did. When you get an ultimate buy and sell in the same pattern, it doesn't preclude a large move, but typically those large moves retrace, and more often than not you just get wishy-washy trade, and one should be looking to fade the extremes rather than go along for the ride. I don't have any new MEJT targets, so I'll have to use some other stuff. We have positive and negative aspects of this. We gapped down, hit lower lows, and we couldn't hold on to any of them. That is positive, and unless we gap down and promptly take out this low, higher prices should print. The catch is that we rallied all day long, and here's the close. We couldn't close over any of these highs despite rallying all day long. That is negative, and unless we gap up and promptly take out these highs, lower prices should print. The conflicting indicators most commonly lead to a gap opening and a quick trade outside of the day's range. Next most common is we close little change and have the big move on Tuesday. I believe for a number of reasons we're going to go down. One is that the daily pattern tends to hit the high of the day in the first hour or two and drop into the close. We have the McClellan oscillator on the NASDAQ over its upper Bollinger Band that tends to be associated with a high. Here's a 65-minute chart. It's one of several time frames in which TDS-T lines from way back when are restraining price action. Note how this TDS-T line from way back when is also defining some of the lows. Those lines are support resistance areas. Here's the weekly chart. We never got number 13 of the sequential sell obeying all the rules. It can finish early, so this could have been it. This could have been it. This is the clearest candidate yet because we closed over this high. The only rule it's breaking is we didn't close over the close of number 8 right over here. However, it can finish early, and I think the case for this being the high relies on the count being wrong. I was counting on this being the end of gray B. Anything's possible, but I think this is probably too impulsive to be part of a typical B wave here. I think it's more likely that when we do start down, it'll be impulsive like this. If so, this could have ended here. You'd have to make the C, you'd have to make this A, this B, and this impulsive move would have to be C. And the evidence for that is if that's the height of A, there's a 50% height of the C, and that would be a pretty impressive relationship if wave gray B were to have ended this week. So we look for Monday for a quick trade outside of the day's range most likely. If not, it'll come on early Tuesday. It'll come on Tuesday if it doesn't come Monday, but I think it'll come Monday. I think the odds favor the gap being down, and I think there's a good case to be made based on the relationships I showed today and the time relationship I showed on Thursday, that high is going to hold. And the big drop could be starting from right here, and that's today's call.